Welcome to this tutorial on finding value companies at a reasonable price. A basic tenet of value investing is to buy companies at less than their intrinsic value. Value investing has evolved since Benjamin Graham and David Dodd first popularized the approach in the 1930s. Modern approaches focus less on finding severely undervalued companies and more on finding quality stocks that can be purchased at a discount. The good news is you can identify these types of stocks using the tools that BellDirect offers. And today we're going to run through the strategy builder to identify value stocks at a reasonable price.
Here's the client section of the website. Once you're in this section of the website, you go along to research and tools, and then around about halfway down is strategy builder. You'll notice that there are a number of options here, from your save screen, featured screens, community screens, and the ability to also build a custom screen. Today, as a starting point, we're going to use the quality stocks at a reasonable price, and this is under featured screens. Out of the box, this strategy employs a requirement for a healthy return on equity and gross margins, plus a low debt to equity ratio to reinforce quality. A maximum price to book ratio of 2 is also imposed. Now, to ensure sufficient liquidity, we're also going to add 2 additional criteria. One is a price performance of 13 weeks being positive, and the other is a minimum 90-day average volume. Let's start by adding the price performance 13-week. When picking undervalued stocks, you really need to trim away any candidates that are downtrending. Otherwise, you may find yourself in a self-perpetuating and money-losing cycle. So what we are going to do here is go down to criteria, go down to performance, price performance over 13 weeks, and we're going to add that criteria. Now we want a price criteria that is a positive criteria over that time, so we're going to change the minimum amount to 0% and the maximum can stay at 100%. Next, we're going to add a volume indicator in there as well, a 90-day average volume. We can find this one under trading and volume 90-day average. We'll add that one in there. Now, some users of Strategy Builder may have noticed the unusual fact that most of the criteria sliders have non-linear scales. This is in fact a feature that allows you to pick distributions of companies. So let's say we want companies in the top 50% of the ASX from a trading volume perspective. We'll just move that and slide that to halfway. Now this gives us a total of 6 different results. As is always the case, it is still important to conduct some additional research before making a decision. And using the BellDirect website resources, we settled on a number of different candidates. Here in the result summary, we have a description on the screen that we just used, and then we have the top results. I'm going to go to the second tab, which has detailed results. One of the stocks is RXP Services. Now this IT services provider to government and corporate clients came in with a return on equity of 11%, a gross margin of 96%, a price to book ratio of 1.4, and a debt to equity ratio which is relatively low. All came within our limits. Its price and trading volume are also respectable. Importantly, it's demonstrated a nice upward move in the past few months, and technical insights show a clear bullish situation that might just continue. An undervalued company that is perhaps gaining market attention, and if I click on the symbol, you'll notice that in the last 6 months, it's managed to return 78%. So an undervalued company that is perhaps gaining market attention. There are a number of other stocks on there as well, and really this tool allows you to filter the many companies available on the ASX down to a much more manageable number that you can research further. Hope that you've enjoyed this tutorial on using Strategy Builder to find quality stocks at a reasonable price. Thanks for joining us for this tutorial. Hope to see you next time.